Hi, Deshupriyo. So SEBI has yet again extended the date of registration for SEBI Grade A, and of course the usual negativity has started. तो लोग बोलने लग गए कि अरे अभी तो competition बहुत ज़्यादा बढ़ जाएगा, people will get lot of time to prepare and our competition will increase, and even because of the lockdown people have actually stopped studying. But I know that you are different because you are studying when other people are just busy panic mongering. And that is why this is a message directly to you. Your biggest competition to get selected in SEBI Grade A is not the lakhs of people who have filled the form for this examination. Your biggest competition is you. And the only thing that you need to focus on is to become a better version of yourself today than you were in the last day. If you agree with this, then please type yes in the comments down below, because I would like to know how many of you are of a same mentality. And so I have already finished covering January 2020 and February 2020 SEBI current affairs, and this video will all be about the March 2020 SEBI current affairs. And if you are new here, then my mission is to empower you with the tools that you need to get success in competitive examinations through the medium of self-study. So if you want to join me, click on the subscribe button, and also do not forget to click on the bell icon so that you, my friend, do not miss any future update. Let's begin. So before we begin with this session, remember that you have to cover all of these SEBI current affairs from at least January of 2020, and I have made a playlist for the January 2020 and the February 2020 SEBI current affairs. I've already covered those 2 months, and this is for the March 2020 SEBI current affairs, so make sure that you watch that. And I also saw a lot of questions in the comments regarding whether this will be enough. So I want to address that. So this is a competitive examination. You are trying to become an officer in the Securities and Exchange Board of India. तो अभी ये सिलेबस खत्म करने वाले बातें छोड़ दो, क्योंकि आप अगर चाहो फिर भी आप सिलेबस खत्म नहीं कर पाओगे, because these questions, the examinations, they are actually framed in such a way that you cannot possibly cover everything. They will have some questions that are out of syllabus that you will feel that okay, ये सब तो कहीं पे लिखा ही नहीं था, but इसके questions तो आ गए. ऐसे ही होता है ये सब एग्जाम्स में. तो इसीलिए आपको मैं ये बोल रहा हूँ कि आप ऐसे मत सोचो कि सिलेबस मुझे खत्म करना है. ऐसे सोचना गलत है. What you have to think instead is you have to cover as much as possible. So in my SEBI current affairs videos, you will get all the information regarding SEBI specific and SEBI related current affairs. Then I also have videos on RBI current affairs. Go and watch those. I have a playlist of RBI current affairs. Now what you will get from there, you do not need to take a deep dive into those current affairs, because those are actually created keeping in mind RBI Grade B aspirants. So you will not need all the kinds of information, but the main news things, the main important things, the headlines, you will need to know. So go watch those videos. And also I have prepared current affairs quizzes. So those quiz videos, those playlists also, I'll just put a link there. So those videos, they will actually help you to understand what kind of general awareness questions can be asked. So these things will be helping you in phase 1, they will be helping you in phase 2, and also for the interview, because my purpose is to help you become an individual who will be a good officer in the Securities and Exchange Board of India. You need to become a person who is deserving to sit in that seat, and for that you need to have a passion towards the capital markets. For that you need to know all about the contemporary happenings, and remember, the interview is not going to be easy for this job. So keep preparing and don't think about these questions. Just give it your best shot and try to cover as much as possible. Let's begin. So item number 1 today. SEBI approves IPO of IRFC Indian Railway Finance Corporation, IRFC. So you might have heard about this organization. It is the dedicated market borrowing arm of the Indian Railways and finances rolling stock acquisition. Now rolling stock, what is that? Rolling stock is basically the locomotives and the parts of the thing that are required for running the trains. So all those kinds of capital investments which the railways will be requiring, the IRFC helps them to gain access to the funds required. So it helps them to collect the funds from the market and to finance all of these things. So that is what IRFC does. and the managers for this issue, it will be IDFC Securities, HSBC Securities and Capital Markets, ICICI Securities and SBI Capital Markets, who are managing this issue. And remember that there is going to be a fresh issue of 93.8 crore equity shares and 46.9 crore offer for sale. Now you do not need to remember the exact figures, but you do need to remember that there is also going to be a fresh issue and there is also going to be an offer for sale. I have already discussed about these terms in my previous videos, so I'm not going into those things again. And you will also note that the DRHP. So what is the DRHP? It is the draft red herring prospectus. So if you are reading, you will know what a red herring prospectus is. It is actually required to be filed at the regulator before you are allowed to go for an IPO. So it states that the net proceeds will be used to augment IRFC's equity capital base and for business growth. So equity capital base will be increased, and also business growth, these funds will be helping whatever they are going to get from the IPO. And SEBI must approve before any company is allowed to launch IPOs, follow-on public offers, FPOs, or rights issues, etc. So these kinds of things like IPOs, FPOs, rights issues, all of these things, they require that SEBI must first provide the prior approval, and only then the company can go ahead with these kinds of things. So remember that SEBI approval is required. Let's go to item number 2. SEBI proposes new mechanism to make e-voting easier for shareholders. Now, what is this e-voting? First, let's understand what is the present scenario. So presently, multiple firms provide e-voting facility to listed entities. So for the listed entities, there are different firms that provide e-voting facilities. Now, shareholders need to maintain multiple user IDs and passwords with these ESPs to log in and vote. Now, this ESP means e-voting service provider. Now, what is this voting that they are talking about? This e-voting. So if you have directly bought shares before, and if you have holdings in some companies, then what happens is you will get certain communications for the annual general meetings, the AGMs, and for various other kinds of activities of the company. And sometimes during these things there is a shareholder vote that happens. So for example, I hold some shares in some companies, and whenever they will be holding some kind of activities like this, they will be asking, they will be sending me an email, and there will be some user ID passwords over there that I have to put. I have to log in into their portals, and then I have to put my vote. So if you have invested in some companies, then maybe you will be having these kinds of emails also, so you will get an idea about what happens. So these votings, because there are maybe lakhs of shareholders like this, so the voting cannot be held by ballot or by any kind of physical means. So what they do, they will go ahead for a electronic voting, and these ESPs, they are going to allow us to log in and to vote. And right now this is a very complicated kind of an arrangement, because different ESPs, we have to maintain different user IDs, different passwords, and all of the different listed entities, they will be using different kinds of service providers. So to prevent all of these things, what has SEBI suggested? There are two alternatives that they are looking into. So the first one involves registering directly with the depositories and then using mobile or email OTP for e-voting access. So you will be getting an OTP via mobile or email after you are registering directly with the depository. Now, who is the depository here? The depositories, you must have read, they are the NSDL, the CDSL, these are the depositories. So with that depository, you can directly register, and then you will get an OTP for the e-voting access. You do not need to remember so many usernames and passwords. So directly there will be some kind of a single sign-on operation, SSO kind of an operation. So people working in IT, you'll understand what this means. So through that SSO and through those OTPs, you can directly go for the e-voting access. And the second method is access ESP portals directly from your Demat account after email or mobile OTP registration through the depository. So again, after the OTP registration, you can access directly through ESP portals that will have the sharing of the details. So the depository and the ESPs, they will be working together. They will be doing the heavy lifting, and you and I, we do not need to remember any of these passwords. It will make our life a lot easier for those e-voting kind of things. Let's go to number 3. So item number 3, new mobile app launched by SEBI for customer grievances. This is a very important news. Remember the SEBI Scores app, it was launched for both iOS and Android. Now Scores, we have already talked about the Scores thing. So what does it mean? It means SEBI Complaints Redress System. So remember the full form of these Scores. We have already talked about this in previous videos. So for complaints against listed companies, registered intermediaries and market infrastructure institutions. So these are the 3 categories of people against which you can go to the Scores platform and you can lodge a complaint if you are not satisfied with their service. Now all the features which are available on the online portal will now be available in the app. So we already have the online portal. So you might have seen that Scores portal online. So this same thing has now been implemented in the app. And also remember one thing, that if an entity they have a complaint filed against them, they must file an action taken report with the SEBI within 30 days of any such complaint. So any kind of complaints like this happen, you have to file this kind of a report with the SEBI that okay, we have looked into these kinds of allegations. So this is very important. Let's go to number 4 now. SEBI proposes detailed review of regulatory framework for corporate bonds and debenture trustees. Now for the debenture trustees, you will remember that in the last video we discussed a few important things regarding the DTDs, and those are the things that are now being discussed a lot more. So there has been a lot of difficulty because of certain NBFC defaults that we have been seeing in the markets these recent times, and for that SEBI wants a very strict kind of a regulatory environment. So right now NBFCs will need to create an identified charge on the assets. Now this means that the charge that they have on the assets, it will be identified and it will be in their name. So the charge creation, you might have already read about it, how the charge is created over assets. So that charge must explicitly state the name of the NBFC, the person who is holding the charge. And this is needed due to issues that arose in recent NBFC defaults owing to pari passu floating charge. Now what is a pari passu charge? So a pari passu charge means when there are equal kind of stakes with 2 companies on the same charge. So if the same charge is held with 2 people and they have equal kind of a obligation towards it, then this is a pari passu kind of a charge, and this kind of a charge is not good, because in case of a default, what happens, both of those parties will come and they will try to lay claim to that single asset that is there. So SEBI wants to avoid all of these things and go for identified charges, and this has actually recently happened in the case of Reliance Capital. So this is a recent case that is going on. 2 trustees representing secured lenders had moved court claiming right on the same assets. Now SEBI was really very worried about this kind of thing happening, and because they saw this is happening, they are trying to make some new changes, and they will be giving some transition time. So 3 to 5 years will be provided a transition time for getting all of these identified charges, and the issuers must also create a recovery fund at the time of security issuance to avoid delays in receipt of funds to the debenture trustees. So if the debenture trustees have any kind of delay for the accumulation of the funds, for the receipt of the funds, so to avoid all of those things, we need to create a recovery fund when we are issuing those bonds. So when the bond issuers will be issuing them, we have to create those recovery funds. So let's go to number 5 now. Item number 5. So SEBI considers changes to margin trading due to market volatility. Now margin trading, we have already talked about margin trading in a few of the earlier videos. This is due to market volatility. So margin trading, it is done by borrowing funds from a broker and buying more securities. So you are buying more securities than you have the funds with you to purchase. So short selling kind of things, like short selling we have already talked about. You are borrowing the shares from somebody and selling it immediately in the market, and then you are buying it back when the price falls, and then you are profiting it. So it is a very highly risky kind of a game, and actually many FPIs, foreign portfolio investors, they have a lot of open positions, a lot of open shorts in the Indian market. So SEBI has already mandated that securities with intraday price movement of greater than 10% for more than 3 days or more in the past 1 month, minimum total margins would equal to the maximum intraday price movement in the last month. So this is something that we already discussed. So these are for the highly volatile securities whose price movement is greater than 10% for more than 3 days in the past 1 month. So we already have studied about this, and now SEBI is looking to double the margins for short selling, which causes market volatility. Now it is a very well known fact that short selling is actually causing the market volatility. So why it happens? It is because whenever you have some speculative bets against a stock, then you have a lot of short selling. So sometimes many miscreants will be doing this and they will be just trying to short some stock so that they can get some profit. However, it is a very advanced game and many FPIs are also involved in this. So you cannot go ahead and just go to banning this same thing. You are going to double the margin requirement for the short selling. This will actually help you because less number of people will be going into the short selling if the margin requirement is quite high. And just as I told that banning short selling, it was not effective as seen in jurisdictions like the UK, Spain, Italy, etc. So except Korea. So in South Korea, it was seen that the ban, it actually reduced the volatility. But in all of these jurisdictions, the banning, actually temporary bans were placed for the short selling of different kind of securities. So what happened when they had actually banned the short selling, the volatility increased a lot more. So banning is not the solution. You have to change the margin requirement in these margin trades, and that will actually help to reduce volatility. That is what SEBI hopes. Let's move to item number 6. Number 6. SEBI allows companies extra time to announce Q4 and financial year 2020 earnings reports. So they will be giving extra time to these companies for announcing Q4 and FY20 earnings reports. Now, why is this? Now, naturally, this is due to the lockdown and the COVID-19 crisis that has been happening. So, relaxed norms for publicly traded companies due to coronavirus curves, and companies which had 45 days from the end of the quarter to file Q4 earnings will now get extra 45 days. So from the end of the Q4, when the Q4 ends, so March 31st, companies will be getting 45 days. So they got until May 15 to actually file their Q4 earnings. But right now, what SEBI has done, they have given them an extra 45 days. So now they can go ahead and file it on June 30. So extra 45 days they will be getting, and annual audited figures which needed to be filed in 60 days from the end of the quarter have now been extended by a month. So both of these things have been extended, and the deadline to file both has been extended to June 30, 2020. This is very important date. Remember, governance report and quarterly shareholding pattern can be submitted by 15th May. So they have actually relaxed the norms for both of these reports as well. So there are governance reports and some quarterly shareholding pattern reports that these companies have to actually file in front of SEBI. So they have effectively got a lot of relaxation in their regulatory filings. So let's move to number 7. AMFI warns of disruptions to mutual funds due to the COVID-19 lockdown. Now, what is the AMFI? It is the Association of Mutual Funds in India, and basically what they do, they have all of the mutual funds as a member, and they do not do any regulation, but they work closely with SEBI to actually develop the mutual fund industry. Now, they have warned of disruptions to the mutual funds due to the COVID-19 lockdown. So all of the industries are right now being affected, and rightly so. They have mentioned for the MFs as well, and the affected parties, they will be mutual funds, registrar and transfer agents, RTAs, and custodians. So all the different people who are involved in the MF industry, all will be affected. So 3 broad areas of disruption they have mentioned: acceptance of physical forms, dispatch of physical checks for redemptions and dividends, along with NISM exams and trade reporting. So all these things are going to be affected because of the lockdown, and even issuing of CAS. So this is the consolidated account statement. We already talked about this in a few of the previous videos. And NAV declaration, so net asset value declaration, every day they have to declare the LAV, and right now because of the lockdown it is becoming difficult for them to maintain it, and daily scheme performance and TER may also be delayed. Now, what is the TER? It is the total expense ratio. So the total expense ratio, it actually shows you how much amount is actually deducted from your investments for the upkeep of the mutual funds and how much it actually costs you. And AMFI has requested SEBI for leniency in reports and regulatory filings, along with relaxing borrowing limits. Now, why they wanted to relax the borrowing limits? This is because there are lot of redemptions happening right now. So because of these redemptions, sometimes borrowing is required, and a lot amount of borrowing is required. So AMFI is stating that you can allow a relaxation in the borrowing limits for a short period of time. Let's move to number 8. ANMI requests SEBI to include brokers, depository participants in essential service. So what is the ANMI or the ANMI? It is the Association of National Exchanges Members of India, and it has requested SEBI to actually include these people in the essential service. So as part of essential service during the lockdown. So they have requested SEBI to advise all the state governments. So they actually needed to do this because there was a lot of discrepancy in the announcements and people were not actually sure whether these people will be classified as essential services, because the markets were actually said to be running without any kind of stoppages, and that is why ANMI requested them. And they have mentioned that financial markets are integrated globally and India is ranked in top 7 by equity volumes. So this is important that we are top 7 by equity volumes, so we cannot afford to actually let these people work be hindered. And equity and derivatives markets cannot be shut down while the same are operational abroad. So if the abroad markets, the equity and the derivatives markets are open, we also need to keep it open because we are deeply integrated. And ANMI, as I told you, Association of National Exchanges Members of India, comprises 900 stockbrokers pan India. So this is about the ANMI. Just remember that. Let us move to the number 9 item. SEBI has eased compliance burden for traders and mutual funds amidst the lockdown. So this is another helpful step given by the SEBI. So what has SEBI done? They have allowed trading members to trade from home and other terminals. So this is something that they had already done, and now till March 31st, non-maintenance of call recordings of client orders or instructions won't attract penal provisions. Now what is this? Sometimes the clients can go ahead and call somebody, their stockbrokers or somebody, and they can request for buying or selling of shares, and those kinds of trades everybody needed to actually have the call recordings saved for these kinds of transactions. But now till March 31st, SEBI has actually waived off this requirement, and after order execution, SMS on mobile is mandatory. So SMS you have to go ahead and send on the client mobile, that is non-negotiable, but the call recordings are not required. And traders can submit compliance reports till April 30. So this is also something that will help the traders get some more time. And the penalty for shortfall in margin collection waived off till April 30. So till April 30 these things have been done, and the deadline for risk management and MTM norms of liquid funds extended to May 1. So actually this is regarding the announcement that risk management needs to be implemented in the liquid funds, and also the MTM or the mark to market norms of the liquid funds, they were actually supposed to introduce some new measures. So this has been deferred to May 1st, and they do not need to do it right now. So let us move to item number 10. SENSEX and Nifty logged their biggest losses in history on March 23rd, 2020. It is a very important news item, and I have actually mentioned the amount of points by which they have fell, and sometimes in some examinations these things can be asked to you. So remember that SENSEX fell by 3934 points and Nifty fell by 1135 points on that day, and they have settled at 25,981 for Sensex, and for Nifty it is 7610.25. Now remember that these two things are not that much important, but you have to remember these two things, this point and this point. These things are very important because sometimes in some examinations they have actually asked such questions. And FIIs, they have withdrawn about 3,515 crore on the same day. So the foreign institutional investors, they will keep on doing some trades, and for that day there had been a net withdrawal of this much of amount. Also a very important thing happened was rupee had breached 76 rupees per dollar for the first time. So we had breached 76 to a dollar for the first time, and Sensex had hit the 10% circuit breaker to halt trading for 45 minutes. Now we have talked about this in lot of previous videos, so I'm not going deep into this. You already know about the circuit breakers, and this is an important figure that 14.2 trillion rupees of investor wealth had been wiped out. So just imagine the amount of loss that we have had because of this COVID crisis. It is a huge deal, and coronavirus and falling oil prices were the primary reasons for the fall. Of course, this is the most basic reason right now for any kind of crisis in the economy. Let us move to number 11. SEBI reduces trading hours in commodities and commodity derivatives. So this is also something that SEBI is doing to actually help with this lockdown situation that is going on throughout the country. National lockdown is the reason for the change. Commodity trading, it actually starts from 10 a.m. and it continues till 11:50 p.m. in the night due to the global market reliance that we have. But right now what has been done, the timings, they have been reduced till only up to 5 p.m. So by 5 p.m. everything must be wrapped up. Now trading in equity markets, it will continue as before from 9:30 a.m. to 3:30 p.m. So for the equity markets, these two things have not been changed and they will be remaining the same. And all exchanges like BSE, NSE, the MCX, the multi commodities exchange, etc. must adhere to these norms. So these norms, they must be adhered to. Let us move to number 12. SEBI disposes of case against IDFC Asset Management and BNP Paribas Asset Management. Now this was in regard to investigation of selective disclosure of UPSI by the Manappuram Finance. Now what is UPSI? It is the unpublished price sensitive information. Now UPSI, this is a very important and integral part of the insider trading. So sometimes some companies, they might have knowledge of these things and they might tell it to some individuals who might do some trades, and that is actually what causes the insider trading. So UPSI, if some party knows these kinds of informations, then they can get ahead into some insider trading things, and that is why SEBI has actually made a lot of norms for UPSI. We also talked about SAST regulations, so that is also something that covers all of these things. So remember that thing as well. And BNP Paribas and IDFC Asset Management were alleged to have sold Manappuram shares while in possession of UPSI, amounting to a case of insider trading. So they had been selling these shares at a particular moment of time when they were actually having UPSI, but this was alleged. But right now SEBI has found that there was no wrongdoing, there was no malefied intention. So this was in regard to Ambit Capital's rating change of the stock after negative profit of Q4 for the FY 13, which had been involved in the dispute. So the dispute, the details are not much required. There was this Ambit Capital's rating, so they will be giving some ratings to the stock prices, and because of the change of the rating, this had actually been triggered. So people actually thought that these two companies, they had access to this information earlier than the general public, but it was found to not be the case. So they have been cleared right now. Let's move to number 13. Indianivesh PMS shut down after lockdown related volatility. So we have already talked a lot about PMS, the portfolio management service. So Indianivesh, this was just one of the PMS companies. It had a size of 60 crore rupees and 190 clients, and they will be winding up their Sprout portfolio. So what is the Sprout portfolio? They actually had this based on small and micro cap listed companies. So small and micro cap listed companies were in that portfolio, and they had been investing in these types of companies. And now they have actually announced that AUC, all the assets under custody will be handed over to their clients. So they will be handing over everything, they will be liquidating everything and closing down the entire thing. And right now the market volatility had caused many issues here with lack of staff, leading to delayed payouts due to the clients. So the clients, they could not get their payouts in time, which was a matter of huge concern, and that is why they have decided that we are going to close it right now. So clients can sell their shares. They can either sell their shareholding, whatever they have, or they can transfer it to a demat account. So whatever they choose, they can go ahead and do. So this is just a case of one company. Can you imagine, because of this crisis, we will be seeing the shutdown of so many companies. So this is really not good for the economy. Let's move to number 14. SEBI instructs CRAs to change defaulter classification for firms during lockdown. So CRAs are the credit rating agencies. So SEBI has placed some new restrictions of the change of the defaulter classification. So usually if a company misses payments of interest or of principal owing to some issues, then the CRAs, they need to change their defaulter classification. They need to actually upgrade it and say that this company is a defaulter. But right now, due to the nationwide lockdown, these CRAs, they should not classify it as a defaulter. So SEBI right now, they have actually told them to do this because of the lockdown related issues that all the companies are facing. So the relaxations, it will be on a case to case basis, because of course you do not want to give it to people who are actually willful defaulters, right? So if the delay is due to temporary debt service problems or delays by the financial institutes, then it will be accepted. So if the financial institutes have some kind of delays in giving them their loans or giving them some funding, then it can be accepted, and there are also some temporary debt problems due to some coronavirus lockdowns, then you can get this classification removed. And any payment reschedules will also be eligible, but lenders must first agree to it. So if any kind of payment reschedulement is being done, then the bank has to approve, bank or financial institute has to approve, and you can go ahead and you can not change the defaulter classification. So let's move to number 15. SEBI has imposed a 1 crore penalty on two promoter entities of Yes Bank. Now these two entities, who are they? They are Morgan Credits Limited and Yes Capital India Private Limited. Why this was done? They had not disclosed encumbrances or pledge on their shareholding in Yes Bank. So this is something that is actually quite interesting. So what happens is you can do something, you can take something called an LAS, which is a loan against a security or loan against shares. So what you can do using this type of loan, you can pledge the shares that you have and you can secure some funding. Now this is something that is perfectly legal, but the main issue here was of reporting. So these two entities, they had actually not disclosed it. Now complex structures were used to issue NCDs, non-convertible debentures, through private limited companies backed by the promoters by pledging of company shares. So the promoters, they had actually created some private limited companies, and then complex structures were used to issue NCDs through these companies, and the pledging, it was done of company shares. So LAS, as I told you, it is legal, but it must be disclosed, and because of non-disclosure, this penalty was actually levied. And let us move to number 16 now. SEBI fines Chromatic India 15.4 crore rupees due to GDR manipulation. So GDR, it is called the Global Depository Receipt. We have two kinds of these things. One is the ADR, or the American Depository Receipt, and GDR, the Global Depository Receipt. Now what these instruments actually do, they can allow any Indian company to issue their shares in a foreign market. We can just put our shares out there and we can get some funding from that foreign market. For ADR, we are doing for the American market, and GDR we are usually doing in the European markets and the non-American markets. So there was some kind of manipulation using this GDR. So the firm's directors Vinod Kumar Kaushik and Ajay Sethi were fined after SEBI found they issued GDRs in overseas market to defraud the Indian investors. So what they had actually done, accounting standards which warrant disclosures and liability provisions for the GDRs were not followed. So whenever you are actually issuing these GDRs, you have to have proper disclosures. You also have to have some liability provisions. So some provisions have to be made. These were not followed, and also another very heinous crime was actually committed, that they had used Vintage FZE as the sole subscriber of the GDR, and investors were made to believe that it was successful. So the investors were actually duped. They were shown that okay, I am issuing this GDR in a foreign market, and see, everybody is actually subscribing to that. So people thought that okay, this company is a big deal, so many international investors are also investing in it. But the reality was that they had used one single company, Vintage FZD, and they had picked up all of these GDRs, and they had actually manipulated all of these things. So this is why they have been punished. Let us move to number 17 now. Item number 17, RBI decides to write off Yes Bank's AT1 bonds with total worth of 8,415 crore. This is a very important figure, and this news item regarding this AT1 bonds, it is very important. So this is an RBI related news, isn't it? So why have I put it here? Because it is very important for SEBI, and there are some news items which you will not understand if you do not understand this. So this AT1 bond, what happens is, it is a part of the tier 1 capital of the Basel 3 norms that we have. So AT1 bonds, what you can do, they are also called COCO bonds, or they are called contingent convertible bonds. So in case of any emergency, there are some provisions where if the CET1 or the common equity tier 1 capital ratio of the bank actually falls below a certain level, then you can actually use these AT1 bonds to absorb the losses. So these things you will understand better if I cover it in a Basel 3 video. Basically you can now understand just that AT1 bonds, they were designed so that some people can absorb the losses in case of a default of a company, and we do not see any systemic defaults. So this was just done for that. And right now there is a crisis of these AT1 bonds, because yes banks, total AT1 bonds of over 8,000 crore rupees, they have been written down. This is a very serious thing. And during emergency, as I told you, this is the Basel 3 standard for AT1. So AT1s, they will actually be totally just written down in these kinds of crisis. And this actually happens when the institution, it is not at all viable. So if this institution, it does not have any kind of viability, its capital base is totally destroyed, that is when these things are done. And so why it was done? Because Yes Bank had reached a point of non-viability. As I told you, the bonds will be fully and permanently written down. This was what RBI had said. So mutual funds, pension funds, finance companies and wealthy individuals had subscribed to these bonds. Now remember that Rana Kapoor, who is now in custody, who was the ex-chairman of this Yes Bank, he had convinced many of these investors to actually invest in these types of bonds. And now, because these AT1 bonds are totally being written off, these investors are very, very angry. Many of the people are going to court, and they are very angry that they are going to lose all of their money. So some mutual funds, they have approached court with the argument that after capital infusion, this can be avoided. So the next item that we are going to discuss, it has direct correlation with this news. So let us move to number 18 now. Item number 18, AMFI asks SEBI to allow equity investors to take first hit in the Yes Bank crisis. Now AMFI, it is actually a proponent of the mutual funds, right? So they are siding with the mutual fund industries. So what they have suggested, the order that they have suggested it, first you have to take the hit of the equity investors. So for the Yes Bank crisis, the first loser has to be equity investor. Second loser, it will be the preferred shareholders. So they will be the second people who are going to absorb all of these losses. And third, finally, the AT1 bondholders at the end. So this is something that the AMFI wants. They want that AT1 bondholders are not impacted, because many mutual funds have exposures to these bonds, and representations were made to both SEBI and RBI for this. So the proponents of the move, so the people who think that AT1 bonds should totally be written down, they are saying that because these holders are paid a premium of up to 1% on coupon due to their riskier nature, they should not right now complain. So there are two parties. One party thinks that okay, this 8,000 crore amount of bonds, we actually cannot afford to write down everything because we are going to lose. And the second party, they feels that no, you can go ahead and write down because that is what Basel 3 actually states. So there is a lot of conflict and lot of court cases are going on regarding this. And even the ICRA, the ratings, the credit rating agency, they have stated that over 93,000 rupees crore of investor wealth is riding on such bonds, which form crucial capital buffers for the banks. Now this is a very important thing. Over 93,000 crores, so almost 1 lakh crore amount is invested in this AT1 bonds. Now understand what will happen. These court cases, they will determine the future of these kinds of bonds, because if these bonds are not as safe as the banks had told earlier, then right now they have to pay the bondholders a lot more interest. They have, because they are deemed a lot more risky, and that will actually erode the usage of these bonds. So the fate of these bonds is actually hanging in the balance in India, and it is very important that you know about all of these happenings. So let's move to number 19. This is also a similar thing. So Axis Trust and L&T, they have moved court over RBI's order invalidating AT1 bonds. So they are also very angry because, of course, as I told you, they are also exposed to these bonds. So both cases are independent, and L&T had subscribed to 100 crore of such bonds. Axis Trust bondholders, they were actually willing to take an 80% haircut and convert the remaining 20% into equity. They had actually been thinking that they can do this, but now it is going to be 100% loss, right? So they are very angry. And AT1 bonds were issued under the impression that they were senior to equity, but if it is not so, then banks must pay higher interest than the return on equity. So just as I told you, that because if these things are now considered very risky, then banks will have to pay higher interest. So this will actually defeat the purpose of the AT1 bonds of the Basel 3. So the AT1 bonds are hanging in the balance just now because of this. And some AT1 bondholders, they are Nippon, Reliance Nippon Life, UTI and Franklin Mutual Fund. So remember these things. And
Franklin Mutual Fund, okay, they have actually had a lot of crisis. So in the April video, I will be talking all about Franklin Mutual Fund. There has been a lot of crisis in the debt funds of Franklin Mutual Fund. Oh my God. Let us move to number 20 now. To restrict the share prices from falling, promoters are looking to offer share buybacks. This is also something interesting that is happening in the markets right now. So in the first 2 months of 2020, 6 companies have bought back shares to stop tumbling stock prices. Now, some companies who have done it, they are Sun Pharmaceuticals, Imami Limited, Motilal Oswal, Sterlite Technologies, etc. So what is the primary idea? So try and understand what is actually happening when these people are buying back the shares. First thing they will be doing, they will be offering a premium. So they will be offering a more amount than the market price. So what will happen? The investors, they can get some amount back, and it will be very beneficial to them, because now the investors are very scared. And also by doing this, and they are the companies, they are using the cash and they are taking back their shares, right? So they are actually signaling to the market that these prices are right now low. So they are telling the market, see, we are buying it, so go ahead and buy more of our shares, because even we feel that it is very underpriced and we are buying it, so why don't you also buy? So this is some kind of a game that they are playing. So try and understand what is happening. So the idea, it is to signal to the market that such stocks are undervalued at current prices and offer premiums. As I told you, they are going to offer a premium to the shares, and they are going to pick it up at a higher price, and it will help the investors who are very worried that the share prices are falling so low. And the maximum limit of any buyback is 25% or less of the aggregate of paid up capital and free reserves of the company. So we have already talked about this, and I think I had a question like this in some of my previous videos. So this is also something that you must understand, and you must remember the maximum limit of any buyback. So this brings us to the end of our video. If you like this video and you like what I am doing here and the information that I am conveying to you, please leave a like on this video and subscribe to the channel, and also click on the bell icon so that you do not miss any future update. I hope that you learned something from this video and that it was beneficial to you. I'll see you in the next one. Bye bye.